Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. Welcome to the How to Make Money Trading Stocks webinar for August 7th, 2015. Mike will be unable to join us today. He is taking care of a dog issue, but we've got a lot of stuff. He sent a couple of slides along to take a look at that I'll be hitting here shortly. Want to remind everybody that everything we do at Active Trend Trader is about, training purposes only, and traders should always paper trade any new method prior to the risk of their own personal capital. And so even when somebody is parallel trading with us, paper trading at first to get started, get a good feeling for it is always a great idea. This coming week, I will kick back off with our midweek market sanity check training on the 12th, which is this coming Wednesday at 6:30 Pacific time. We will kick off with Fibonacci's hidden secrets. If you've not had any training on Fibonacci's, this will be an excellent training aspect for you, because Fibonacci's are kind of phenomenal in pointing out the hidden levels and hidden areas of support and resistance when none appear on the regular chart. So what's going on in the market today? Well, this week we've seen continued weakness in the market. We saw the S&P currently testing lower support, and so the big question we have, of course, is will the current level of support hold? And then secondly, NASDAQ 100 broke down below its previous swing low. So now we can say that it is in a confirmed, at least short-term downtrend based on today's action. And then finally, the Russell. The Russell is in a downtrending channel, and it's at the bottom of that. We will see if that bounces a little bit before the end of the day. And so outside influences and just what's going on in the market, we've got one underlying weakness is catching up with some of the leaders. We've all seen what happened with Apple this week. Apple is basically kind of selling off and going into at least a short-term downtrend. We'll see if that continues. And then earnings. It seems like there have been more disappointments this week in earnings rather than surprises, and the disappointments have been punished significantly. And then there was a lot of chatter today about interest rates and how the Fed's locked into this September interest rate increase. A friend of mine who's a VP at BlackRock was saying that they've got it all lined out for a rate increase in September. And what do we expect from that rate increase? Well, we know that the Russell, which this may explain a little bit of why the Russell is showing the highest level of weakness. The Russell is made up of small cap stocks, and interest rate increases tend to impact that and more in a negative way because of basically the borrowing that the small caps have to do to stay in business. So we'll see if that continues on. If they do say, well, we're going to wait till the end of the year, put it out in December, that would be one heck of a Christmas present, wouldn't it? If they do push it out that far, I would anticipate and expect the Russell to bounce a little bit, but the Russell right now is the weakest link. Here's where we were last week. We had bounced off the lows out of one of this reversal lows on the percentage of stocks over the 20-day moving average on the NYSE. And where are we today? Well, Friday's high last week was just about as high as she got. And then we've rolled back over most of this week, and we've seen this, and it's been reflected in the selling that's taken place this particular week. So as we see this, what I'm doing basically on this particular chart, and I can lay this in here, yes, we've got this going on still, which means fewer and fewer stocks are even wanting to play in any type of upside. And then add to that we're starting to go down here and live. And if you go back in the history of this particular chart, when the market really turns negative, it this indicator tends to live somewhere between the 50 and even lower, as we see back here in October of this past year when we got our last really healthy rebound. It actually got down into single digits, but got down below 15, so it got down in the 12, about 12% of the stocks on the NYSE above their 20-day. In real severe markets, that can get all the way down into the single digits. I think Mike and I were talking this past week. There was one time prior to the 2008 rebound, it had gotten down to like 2 or 3 and then rebounded from there. So with that, no good news there. Let's take a look at, here's an interesting chart, and and it's partly an answer. Why do we pay attention to the percentage of stocks above certain moving averages? And as you can see here, we'll play with this one a little bit before the other one pops up, hopefully. This is back in 2007, and as we see, we had a turnover at the first part of 2007 in the percentage of stocks above their 200-day moving average on the NYSE in this case, and it's continued to weaken until it really fell out of bed. Well, what was the S&P doing during this time? It went on up, hit a new high here, correct a little bit, went back up and hit a new high in September of 2007, and then went into its significant correction from there that we all remember well, and did not turn back around until mid part of 2008. Well, what is that telling us regarding where are we at with the current market? See the similarities there? Very interesting. Yeah, Mike and I were chatting about this. It really is kind of phenomenal, the specific similarities. What do we have, that is similar? Is one, we've got the market, racing over, made a new high, dropped, made a new, and it went back up, made a new high. But what's happening? The underlying breadth of the market is seeming to be falling down and dropping. And right now, only, as of when this chart was taken, only 39 to 40% of the NYSE stocks were actually above their 20-day, their 200-day moving average. And 200-day moving average, of course, is the average that a lot of technicians will use as to categorize the market as either being in a bullish or a bearish tone. And as we see here, what has been going on is the S&P has been just tracking along here, just going right straight across in a horizontal channel as we continue to weaken. Will we get a similar, type of rebound and then a fall? We'll see. A lot of people are pointing towards the September through November timeframe for some significant events that will impact the market. We will see. Will that be, the Fed raising the rates, which will be kind of like the final straw to push it over the edge? We'll see. I know there's a lot of professional professional money managers out there and stock managers who are, under their breath saying, yeah, we need a really good correction. And as I was saying, I was talking with my buddy who's a VP at BlackRock, and he said, yeah, he'd like to see a good 20 to 25 to 30% correction to kind of reset things so that then we could go back into a significant upswing. So with that, we'll go to the charts here shortly, but here's, as of 9 o'clock this morning Pacific time, which is about 11 o'clock our time here in Arkansas, the Dow so far for the year now is down almost 3%. The S&P is just about break even, and as you can see, compared to the chart below this is where we were last week at this time. Each one of the indices, look at this, the Russell now is almost back to break even. And isn't it amazing that 6 weeks ago the Russell was the one that was leading the charge higher. I mentioned last night in yesterday's market update that the NASDAQ seems to be, it seems to be lagging the Russell a little bit, but has now put in a very similar pattern, which we'll see here shortly, to the Russell. And so each of the indices, as you can see, is down at least 2% from where it was last week. In this case of the Russell, it's more like about a little bit over 3%. So let's take a look at, see what the charts are telling us. Okay, things did not get any better from the time when I started off the presentation with regarding the S&P. The S&P has now, we came back up off this nice rebound off the 200-day moving average. It ran up, but as you can see, the momentum just completely ran out. And as we started this rebound, as you can see, there was nothing going on to say, hey, momentum was behind this move. We get up to the resistance area about 2110, and now we've rolled over from that. If we do close below the 200-day moving average on the Russell, then I think we can anticipate that, and we also take out this low here, then we're probably going to revisit back here in the 2050 to 2043 area. And as you can see on a weekly chart, it is looking weak. We've got weakness in the true strength indicator, we have weakness in stochastic, and we also have basically weakness in the momentum also. Let's see what the NASDAQ's doing with us, or for us, or to us. And I am broadcasting on my hotspot, so there's a little bit of a lag in the charts coming up. There we go. Okay, let's take a look here. Let me get my screen tools back up. There we go. We spoke about this last night. Here was the swing low that we were watching on the NASDAQ. This swing low has now been violated. So that brings into target for us either the 200-day moving average. That breaks, then we're down here in the area of the uptrending channel line that's been in effect now for approximately three years. It brings that back into effect. But we can also get what we have seen going on with the Russell. Let me get rid of that. And what we've seen with the Russell, where the Russell has gone into a downtrending channel. Well, we can apply that to the NASDAQ, and so any type of reversal here would be down at the bottom of the channel, and we'll see a rebound. Let's see if buyers, right now the sellers are having their way. We shall see if buyers come in prior to the end of the day. Let's see what Dave said. On 10-minute intraday chart, 200 daily moving average acted as resistance for the first time this year at 9:10 Pacific time. So very interesting, Dave. Yeah, when those moving averages, those longer term moving averages start turning around and reversing their role of their, are changing their personality from being one of support to resistance, that can be very indicative of what may be happening. Now, what's happened throughout the year, and is that the market has done very shallow, and this has been going on for just about the last 3 years, very shallow pullbacks and then a rebound. And we will see if that does take place over here on a weekly chart of the NASDAQ. What are we looking at? We had a dark cloud about 3 weeks ago, a little bit of a rebound last week, and now it's continuing to move more to the downside. Look at it, right above the 100-day moving average. And if we get a close here, then that's our next target area. And then if we get a break of that, then we're down here on the 200-day moving average, which currently is paralleling the uptrending channel. And Dave said that was on the S&P chart. Yeah, I've had to slide the comment side over to the side so I can see the screen. So I'll be checking it as we go. The Russell. Russell is continuing to weaken. As we've seen, it did a rebound also up off the 200-day moving average, went right up into the 100-day moving average last week, and this week has just flirted with that and finally came up, kissed the moving average goodbye before the last 2 days of significant downturn. And as you can see, this has been a complete retracement, actually more than a retracement of this move, but from here to here, we've now broken through the bottom of that after it got up in the 50%, just above the 50% retracement. And on the weekly chart, we're sitting there looking, it's approaching a level of support at the about the approximately the 1200 level. And if we, now that we've fallen back in here, this level of this range between the 1154 and the 1200 area now becomes the new potential playground for the Russell, and we'll see what takes place on that. As you can see, we've got the true strength indicator still heading down significantly. There was basically no movement in the past few weeks in the momentum. As the market, as the price started to rebound on a daily chart, you see here no corresponding rebound in the momentum, and the true strength indicator index could not even get back to the zero line before reversing and turning over. So it's weak, folks, and we'll be basically just I'm currently holding a position, a short put on the Russell with our strategy 3 trade, and as we stand right now, it will close prior to the end of the day, and it may close for a loss, but we had a profit on the calls at the beginning of the week. So just no indication of where it's going to bounce. I mean, it has now broken through this level, and again, there's a level of support about 1188, and we shall see what happens moving into next week. So let's go. Any questions on the index, folks? Okay. So in about 5 minutes, we'll run through the rest of the slides, and then I'll be ready to look at some individual stocks. So just want to remind everybody that for non-members at Active Trend Trading, we focus on 3 things: what to buy or what to trade, top quality IBD stocks and or index ETFs, where to enter, where to exit. Right now we're in a very big protective mode, making sure that we keep our losses down to a small portion, and we're very actually we were stopped out of our final long position today in Blackhawk. So when to exit, what strategy to use, and what to expect. as we stand. We're up a little bit from last week. We were sitting about 3,500 last week for the year. Now we're up at about 37. And again, basically flat the market except for the strategy 3 trade that's ongoing. And so, Gino, I will do that. And we're focused right now. The active trend trading system is a system that I'm trading, but it is then focused towards 3 different strategies, with 10% of our funds allocated to basic options, 10% to wealth building income, and the other 80%, which at this current time in the market, I want to have a lot of cash on hand. And that's where we basically are right now, with a lot of cash on hand and just these little nibbles in these other 2 areas. Here is where this is the weekly options generating that I've been doing on the S&P, the SPY, which I was anticipating a fall in SPY. And so it's doing fine. I'm currently staying flat and just taking advantage of the fall in price in the S&P to increase the value of my long January 2017 210 put. And so this is where we were standing last week, and I didn't do any puts on this position this week at all. So let's see. So for the week, as I said, Hawk hit the stop this morning and then rebounded shortly after that. So it's not back up in a buy position, but with the weakness in the market, I'm not going to basically go into that. We did do a simple option on cyber with the SYBR, with the anticipation that it's going to continue to increase in volatility, which will increase the value of the call option as it gets closer to earnings, which I think the earnings on that are the 11th, which is next Tuesday. I had 2 contracts open. Like I said, I was going very small. Got them for 420, closed the first one out yesterday for 530, and I'll be holding the other 2, the other 1 contract up until the day of earning to see what volatility does for me there. Wealth and income and generation. Currently, as it was right now, for the week, the 2 legs, profitable on one side, loss on the other, so down about $178 for that trade, those legs this week. And I'll be looking to set new positions early next week. Then the early warning alert, we had a trigger, and the aggressive traders could have traded anything like UPRO or TNA, TQQQ. There was a good entry on UPRO, which was at about 67.84 the day of the trigger. And then one could have got out a portion of that, or if they held a second half of it, exited with no gain for the second half, it would have been about a 2.8% gain, which in this kind of market space is not bad. So just a reminder for anybody who's watching this video who's not a member of the Active Trend Trading, if you are watching, we do offer a special, 40% off the regular price and about over 50% off of the regular price on the early warning alerts. So folks, that's it for today. Sorry Mike couldn't join us, because I know he always adds a lot of stuff, but one thing that Mike wanted me to remind everybody of is that it appears as if oil stocks may be hitting a bottom, but they haven't turned yet. But they're setting up similar to what they did a few months ago, and so there may be a rebound rally just around the corner, but he said that just to mention that, because that was something that he's keeping his eye on. And with that, we'll see you guys next week. Have a great weekend. Trade wisely, trade profitably. So thanks, David. So let's take a look at some stocks. And I've got Gino here. What do I do with the, there you are. Okay, let me put that over here so I can see it. Gino's already got his request for stocks out there. So let's take a look. If you have any stock you want to take a look at, just let me know. NXPI. Okay, in actuality, NXPI is actually holding really nicely considered the weakness in the market today. We've already gone past earnings, which it leapt up out of that. And I would categorize NXPI as kind of a toss-up right now. Let's see if it can maintain its support here about 94. And it's got a high up here about 100, but in reality it's more like about 98. So that's a $4 differential there, Gino. And if this support here at 94 does in fact hold, like it comes back and like it's retesting today, that is not a bad area to provide an entry, but you might want to make your first profit target right here at 98. And then if it breaks out from there, then it could be off the races. I would say that NXPI is something to keep your eye on when the market, and if the market, well, not if, but when the market does turn back around for a rebound, this might get a really nice rebound. Then Gino has SWKS, which was on the, actually it was on the short list. And at this time, where are we at? We're right at the 200-day moving average. And so I'd be keeping an eye on this one, Gino, for a couple of reasons. One is, will it do a significant bounce off the 200-day moving average? Will it be potentially a DDD that happened in 2013 where it ricocheted off the 200-day moving average, ran up a little bit, then came back and retested, and it turned out to be like a 2.5, 3 month trade where it retested about 3 times up against the uptrending 200-day moving average, but before then blasting off and for a really, really great gain between, I think, September and, no, it was earlier than that, it was about April and February of the following year. It was up, I believe, I think David mentioned this at the BAM. He said it was up, I think it was up about 200%. I'd have to take a look, recheck that out. But as you can see right now, and I'd want to be taking a look at, let me get one thing up so we can take a look at that. Edit. There we go. Let's get some volume in here. Okay, big selling, big selling. At some point, these big selling days, it's going to provide us a capitulation. It may be in the process of trying that. But as you can see, the buying days, the volume is significantly below that of the selling days so far. CPE. Okay, it's a petroleum company. I don't know a lot about it. It's got pretty good, let's see what kind of, I'm moving things around on my screen so I can see it. Yeah, it's got a little bit of over 1.6 million shares traded per day. Is it in fact turning around? The stock that, I think it's UCO. Yeah, it is. As you can see on a weekly chart, things are getting extremely oversold. Now, will it flatten out and find a bottom here? You know, we don't know at this particular time. But what we would be looking for is actually we would be looking for for it to do something like this. This focus here, these few weeks. It finds its support, bounces up, rejects the resistance line, pulls back down, and then it's this second time. That's when, and this led to a really nice little gain from about, and this was very quick, a few weeks, but a gain from the hammer here up to the top of about 20 bucks. And so just something to keep your eye on. It's not there yet. There's a lot of people saying that oil is going to remain weak. And so we shall see. Let's see. I am open for any stocks, folks. Let's take a real quick look at Apple and see what Apple's doing. Because Apple does, as we know, have a huge influence on the, especially the S&P and the NASDAQ and the Dow. And as we can see, Apple is now in a downtrend. Now, what's it going to do? Is it going to return back up to the 200-day moving average? Is it going to move back to the 8-day moving average or the 20-day moving average? Let's see. Right now it's not in a shorting position, but let's see if we do get some kind of a rebound here, and then weakness returning back into Apple. As you can see on the from the indicators, the TSI is getting low. The momentum on the weekly chart also lowering down, but we do have a turnaround now in the daily momentum. And as we've mentioned before, when the TSI gets below -50 or above +50 or close to a +50, that is oftentimes not a signal to get in for the trade, but a signal that a bottom or a top is near. And then we go and we watch the candlesticks and watch the levels of support and resistance to see if strength is coming back into the market. Excellent. Another that I'm really kind of liking. AMBA holding up really, really well considering the current market conditions. We've got support down here at 110. If we break back above the 8-day moving average, then we are probably moving back up into either the upside of the moving average envelope or even back up to the 127 area. Like I said, considering the weakness in the market, AMBA's holding up really well. Gregory wants to take a look at HZNP. Okay. So reported earnings this morning, huh? And it was trying to get to come up, okay. Actuals, 8 good. So Horizon Pharmaceutical. So we get a drop. We're down here to the 100-day moving average. Or are we going to get a rebound back up? Let's take a look at what's going on here. If we consider, okay, that's not really a great swing low, but it still could be considered a swing low. Come up, make a new lower swing high, and then we've commenced down to the downside. I would be watching this candle right here, Gregory, to see if it puts in and forms like a hammer, and see if we get some more retesting in here and see if it rebounds up. If it's a classic failure type move, what you would see is a bounce here, slight relief rally back up into the moving averages or back up into this resistance area, and then a rejection and a fall. That would be a classic kind of a failure move. Okay. Hi, Judy. How are you today? Netflix was looking a little bit weak this morning. Is it ready to roll over and fall out of the sky? Not necessarily. I mean, it is one of the stronger stocks. It did a nice rebound off the 20-day moving average here. That was a great move that started last week, and it's held on to these gains up here in the. And so I would be watching basically between the 120 level, the 130 level, to see if if this, because if when the market does rebound, if the market rebounds, this would be one of those stocks that it's held up well, and then see if the volume comes back in, the buying volume to drive it higher. If it fails here, let's say that the TSI, which is turning over here, the TSI here, which is up in the upper reversal area, but the momentum is still looking good on a weekly basis. If it does break back down, where's it likely to break to? Well, the first place it's likely to break to is this level here. Hold on a second. First place, here's your first, kind of like level of defense, if you will. It's where it broke out from this little cup. It broke out about the 117.95, 118 level, and we'll see what transpires from there. Watch for bounces here because it basically could do just a really good classic go back, retest the breakout area, and then move back up. Yeah, Netflix is one that will stay on my watch list for a while because it's one of the stronger stocks out there. Okay, Susan, let's see here. Amazon. Yeah, David, I agree that we could get another a bull flag. David says it looks like Netflix may be putting in another bull flag, without a doubt. What are we doing with Amazon? Amazon had great earnings. However, this was a bullish, I would call it a bullish bearish move. It leapt open up here it opened up here at almost 580 and then fell about $45 in that same, and that was basically sellers came in and just drove this down. It hasn't been able to make it past the midsection of this long bullish bearish candle. Has not been able to make it active, and so it's been basically just in a little channel, a $20 channel. But it looks like it may be weakening. What do we got going on? We've got momentum going down. We've got TSI rolling over. We've got TSI rolling over on the weekly, and right now we've got the momentum on the weekly also starting to drop off a little bit. So if this does in fact, if Amazon does melt down, we know that on any gap up like this, about midway through the gap up, there is a level of support. Actually, this whole area in here is support, but about midway through is a level of support. So we're already starting to test down into that. And but I would, if you are watching Amazon, I would take the high here, the low there, add them, subtract, divided by 2 to find out the exact location of the midsection, and then use that kind of as a line of demarcation for planning things around Amazon. Hope that helps. Gregory XP. Oh, not AZP, AXP. AXP. There we go. Okay, XP. Oh, American Express. American Express may be, this may have been its bottoming move. It looks a lot like a bottoming move where it comes down and retests the low from over here. And now it has rebounded back up. So we have I would say, in reality, a slightly higher low here, but clearly it took out this swing low here, or swing high, excuse me. And so it's now running right into the 50-day moving average, and we will see if it pulls back from the 50-day moving average to do some retesting. So it's still got some construction that needs to work. V is another credit card company. V is on the IBD's leaderboard. And it did a really nice rebound right before earnings, had a nice pre-earnings run, also put on a bullish bearish candle. And as you can see, it came down and retested, came back and tested almost near the high, then has dropped. Now, where's it going to go from here? It's always a good thing, know where your breakout area is. So 72.87, that's one area. And then also down at this breakout level here, which is about 70.70. So at this point, who knows? Let's see. What else are we looking at? Here's a couple of stocks that fell off. Palo Alto Networks fell off the leaderboard this past week, and it's down testing its support at the 170 level. Looks like it may be trying to put in a hammer here. We will see more towards the end of the day. But again, one of those classic failure moves where it comes down, bounces, drives back up on a weak relief rally, and then fails. And once this failure took place, it dropped, on high volume down below the 50-day moving average, and this was the largest dollar range that it had for almost 2 years. A couple other ones that are interesting from a short position. I kind of like Apple to the short position, but AFSI. Again, it has its initial, failure after, and this would be a shooting star type of pattern. It drops, and now we're down seeking where it had support before, around the 66 level. Again, watch this one to see if we get a little rebound up here, or a rebound back into the moving averages, and then some weak candles and then a reversal. If it starts struggling on any type of relief move, that would be an indication that it's going lower. On a weekly chart, it does look like it wants to go into a lower. And if today's candle finishes where it's at, we will have a bearish engulfing on the weekly charts. So we talked about AMBA. FireEye is the last one I'm going to mention. FireEye is in a downtrend, but it appears like it is trying to see if it can find support here in between, in a support zone between $44 and $40, which is the 200-day moving average. It does now have a downturning 50-day moving average, so this is one of those could go either way. If we retake the 44 level and drive up, it's probably not going to drive much higher than 46-ish, and that's where it may roll back over and fall. The one we got stopped out of today, Blackhawk, as you can see, it came down and just nibbled. I mean, it's one of those just ticks, you go, it just basically nibbled just below the 44 level, and our stop was down to about 43.87, and it took us out because it was basically, we're following the 8-day moving average exit roll, where we had a close below the 8-day here, and our low was 43.97, and I took 10 cents below that for my stop, and it checked us out, and it's really Yeah, sometimes frustrating when that happens when you're so close to a support level, but that's why we have rules. Now, if this if this basically goes into another rebound, then we may be in a situation where it's going to trade and bounce between, the 43.50 and the 46 level before it makes up its mind which way it wants to go. On a weekly chart, however, that is a bearish engulfing, so it doesn't look real. It looks like we could do a more significant pullback, like back down here to the, I can't see that, back down here to the 40.50 level. So, okay, folks, I am going to call it a day with that. I've got to get out of the house so that folks can come look at my mom's house, and I hope that hope you can hear me okay, and I'll get this recording up, but it'll be later today after we get back to the house, after the folks come in and check it out. So have a great day and have a great weekend. Look forward to whatever's going to happen next week in the market. It's surely to be crazy. And God bless everybody. Bye-bye.